All right. Good morning, everybody. Good morning, Jeff.
Hey, good morning, Steve. How you doing?
Good, good.
Are you enjoying these market conditions?
Yes, definitely. These have been very, very profitable uh, trading.
Well,
But
Scott says this is a great product. Trey wants to say the chocolate is poured and I'm ready to go. I wish I had some chocolate. Trey says Mr. Bigalow is the man. I've tested his methods myself, and he is, well, darn good, is the way I'll say that in chat. Anyway, um, I just turned on the screen share, so I'll let you know as soon as I can see your screen.
I'm trying to get my from beginning. Okay, here we go. Okay, can you see me
I can see it.
there? Whoops, now I just lost it. That's a fine howdy do. There we go.
Perfect. I'm out of the way. Your turn.
Okay. All right. Well, good morning, everybody. The first thing I usually ask is how many people have seen my presentations before? Y for yes, N for no. That just gives me a feel for how much description I need to place on each uh, description of the signals and the patterns. Okay, it looks like most people most people have seen it before. What we're going to do today is we're going to kind of narrow down uh, the analysis on the Doji, which creates some extremely high, and I say kind of stress the word extremely high results as far as probabilities of a trade working and the magnitude of the trade working. So the Doji is one of the 12 major signals. Through the years, there's about 50 or 60 signals in the candlestick analysis or universe. When I started going through, I wanted to learn every single one of them. But it came down to there was only about 12 that you really need to learn for two reasons. One, because these are the signals that create the highest probability results uh, of a change of investor sentiment. And two, they occur 99.9% of the time. So instead of wasting your mental time and energy trying to learn all of them, if you just concentrate on the 12 major signals, you get two major advantages. One, you can visually recognize when there's a possibility of a reversal. And two, the Japanese race traders have described what the investor sentiment was that created those reversals. So that combination puts you in the class of investing as somebody that's been trading in the market for 50 years. They also convert into patterns. The reason that we see patterns is because human nature does the same thing time after time. So the strongest trades with dojis, we're going to look at your best friend, the left right combo, the series of dojis, the doji sandwich, and the bullish flutter kicker. And the doji is when it's acts as part of a signal, the doji is actually this formation right here, where the open and the close are very close together, kind of making a little cross. Now, if you've got a what we call a morning star signal, it's usually represented with a big down day, a day of indecision, a doji, then a big up day that closes more than halfway up this candle. Anytime you see that doji, especially in the oversold condition, and my oversold calculations is based upon stochastics, and those stochastics are at 1233. Is that you, Jeff?
Did you? Oh, sorry.
Okay. That's right. We didn't want to catch you during a phone call. Uh, so, anyways, there's when you're in the oversold area, the Japanese race traders have very common sense. They say if you see a candlestick reversal signal in the oversold area, the probabilities are you're going to see a reversal. If you see a candlestick reversal signal when your stochastics are in the overbought area, you're probably getting pretty close to seeing a reversal. So whether you're analyzing the Dow or an individual stock, it doesn't matter. The definition of a candlestick signal is it is the accumulative knowledge of everybody buying and selling uh, during a specific time frame. And that time frame could be a 1 minute time frame or a monthly time frame. This could be a 1 minute chart. This could be a weekly chart. It's all the same situation. What is the probability of success with this doji? Let's put it this way, Herman. We wouldn't be looking at them 400 years later if there wasn't something relevant to these signals. There's one truism on Wall Street. If something doesn't work, it disappears very quickly. Anytime I see a doji or any candlestick reversal signal occurring in the extreme, like the oversold or the overbought condition, I'm getting ready to do something. What about doji 2-bar before? Oh, you still need to see confirmation, and look where your stochastics were. They were still heading down a little bit. The bigger, and I'll retrace here a little bit. Another thing that adds confirmation to whether you're in an extreme of a trend is this right here. We're going to get off base here a little bit, but this is the T-line. The moving averages we have on our charts are the 200, which is the red. The blue is the 50-day simple moving average, and the 34 EMA. But the 50 and the 200 we have on those charts because everybody in the world, every major money manager in the world uses those moving averages to make their decisions about their portfolio. We can see exactly what those decisions were based upon the again, what the investor sentiment is doing at those moving averages, because that's where everybody's watching. So back to the T-line. The T-line is very simple. If you see a candlestick buy signal and a close above the T-line, you can stay long until you see a candlestick sell signal and a close back below the T-line, with the caveat that the further away you move from the T-line, the higher the probability it's going to come back up and test it. So if you see a reversal signal, it's more than likely you're going to be in the right direction. Then all you have to do at that point is see what it does at the T-line. If it fails, you come back out of the trade. If it goes through, you have a good uptrend. So the first major signal that you can use using the doji, let's see, can everybody else hear me? The T-line is the 8 exponential moving average. All right. So anytime you see a signal that is combined with the T-line, combined with the doji, it's going to add that much more credibility to the reversal. A left-right combo is a doji followed by a bullish engulfing signal. So if I see a doji, the next day they do, so that's your little left jab. This is your big roundhouse right, telling you, indecision followed by very strong decision. So look at all this indecision right here. It looked like it was trying to reverse, but nothing had happened yet until you saw the left-right combo. And what'd that tell you? Pretty much this is what we call a cradle pattern. This was started the crone price move. When you get a chance, why a 1233? It was very sophisticated, John. One night, probably 40 years ago, because I'm a swing trader, and this was just when the charts were starting to come on the internet. The normal was 14.55, but I'm a swing trader. My trades last anywhere from 2 to 10 trading days. So I sat down one night and I just kind of plugged in where was the bottom and where was the tops and where was the best correlation. And 1233 worked very simply for me. But at this time, the stochastic is not oversold. No, but you're basing, you got doji. Remember, A doji represents indecision. A series of dojis represents more indecision. Then you've got your left-right combo. You can see you're already starting up, coming out of the oversold area. So this is what I call convergence analysis. What does the 1233? That's just a number for stochastics. 12-day time frame, and I don't even remember what the 33 stands for. This is being recorded, yes. Does not the left-right combo include that the left is in a preceding trend? Yes, you want to see that you're in a downtrend. Remember, anytime you see a doji in the oversold area, you start looking for a reversal. And if you can put your analysis visually recognizing a doji left-right combo right smack dab on the 50, which is where everybody else is watching, that tells you exactly what's happened to investor sentiment. You can start buying, especially when they start trading up above the T-line, number one, and number two, if they've broken this little downtrend, that tells you you've got a high probability trade going on. So remember, if one doji represents indecision, a series of doji represents major indecision. And so when do we buy this one? When we see a reversal signal confirming the dojis. And there you go, the left-right combo. Now, these charts that I'm showing you aren't just kind of happenstance. These are trades that we're either in right now or we've recommended over the last few weeks. Yes, right now I'm just showing the daily charts, Richard, just to illustrate. Now, if I saw this on the 10-minute chart and I was trading soybeans, yeah, I'd be buying right here. What's the left-right combo? It's a doji followed by a bullish engulfing signal. Let's see. Do you use the 20-day? The 34 just seems to work a little bit better. The 20-day doesn't seem to be as effective unless you're in a steady trend. And they might, instead of coming all the way back to the 50, that trend, they may only come back down to the 20. And the 34 we don't use, it just adds as an additional place where reversals might come into play. EXP does not look like an 8 EMA. I don't know. We'll try to get to one that does. Again, there's your piercing signal. Didn't confirm. Then you had your left-right combo that closed above the T-line. If you weren't buying on this day, you definitely were buying on this day. Now, what are the probabilities of the T-line? I'm sorry, the left-right working? If I am in a trend and I see a left-right combo, whether it's bullish or bearish, if I saw this, and let's say it didn't even close, in this case it did, but let's say it didn't close below the T-line, I'm still closing out the position because the probabilities of something changing after a left-right combo as far as the direction is extremely high, and the power of that signal is extremely predictable. Let's see, how many questions? Yes, Mark, it works for Forex. Remember, candlestick signals are not for a market. All they are is analyzing what investor sentiment is doing in specific markets. The moving averages are the red is the 200, the blue is the 50. Simple moving averages. That's what everybody around the world uses. Then we have the 34 that works reasonably well, but the main one that we use is the T-line, the 8 exponential moving average. You say the left-right combo is a doji followed by a reversal bar. That sentence only covers only one side. Oh, that's not a sandwich. We're working on the left-right combo. We'll get to the Doji sandwich here in a little bit. Yes, works on all time frames, whether you're trading off the 1 minute, 5 minute, 10-minute chart or the daily, weekly, or monthly. Is a doji followed by a bearish engulfing an overbought area? Yes, we'll get to, you should have one of those. We started buying El Paso. Look at your left-right combo, and where did it occur? Right smack dab up where everybody else was watching. Started a strong uptrend. We just got into ALGN. Big left-right combo, belt hold type signal. And the bigger chart is a big fry pan bottom that looks like this has more upside. How is the left right? How is it left right if you describe only one side? Harry, I don't understand the question. There's your doji. There's your bullish engulfing. The combination of those two is a left-right combo. This works for futures. It works for anything you're trading. I trade soybeans. I trade cattle, hogs, the dollar. Again, it's but overbought. Yes, and that's another thing we teach is when you're buying a signal, you're looking for a signal in the overbought or oversold condition. When you see a pattern breakout, it's usually going to be occurring when the when the stochastics are in the overbought area. Is there in this a chart for on something it will work? I don't under John, rewrite that question, please. Is this in the oversold? No, this is a fry pan bottom breakout. And when you learn the patterns are that they are usually going to break out when your stochastics are already in the overbought area. What are the stochastics used? The stochastics is 1233. Do you care about volume? Don't really care about volume. Usually you want to see the magnitude of the move, telling you there's a strong buy going on, whether it's a big signal or whether it's a gap up, a signal. Yeah, we're getting way off base. The signals, especially with the signals and the combined with a pattern, just kind of adds confirmation that pattern is breaking out. Yes, if this had been bearish right here at this level, that would have told you it's time to go short because they failed at the 200. Get ready to go short on this. Chart, and I don't know what a talk is. Okay, let me oversold. Yeah, if your stochastics, if you see a buy signal in the oversold area, the probabilities are when you see a confirmed buy signal, you're going to be in an uptrend. Your info, ALGN, the 8 EMA goes through the middle of the big bar to the right. May need to check. I threw some of these together late last night. Yep, so here's the doji rule. This is what makes the doji very effective. Is the fact that the price will usually move in the direction of how they open the next formation or the next candle. That's what makes the doji sandwich very effective. A doji sandwich, I got this in the wrong place. Here's a bearish doji sandwich, a big bearish candle, a doji, and the simple doji rule, the price will usually move in the direction of where they open it the next day. So if they open it lower, we can be shorting immediately because we know the probabilities are that this candle and this candle right here are going to be approximately the same. If I see a doji after a strong candle, and if it's right on a major resistance level, potential resistance level like the 50, if you use a simple doji rule, if it opens positive, the probabilities are pretty strong it's going to be moving positive. You add that factor that your stochastics are heading up, telling you there's your left-right combo right there, right off the T-line. Now you've got a doji sandwich. That's pretty much telling you the bulls are taking control. Stochastics versus MACD. MACD is a lagging indicator. Stochastics are telling you exactly what's happening based upon the formulas they use for the opens and closes right at that time of the signals. So if I see a doji right here, this was on FireEye on Friday. See a doji. If it opens positive the next day, we know the simple doji rule that it's going to trade positive, that this candle right here is usually going to be the same magnitude as this candle right here. And what's that tell me about my resistance level? It's not there. I can be buying immediately. So Johnson & Johnson, I wouldn't trade Johnson & Johnson because it's such an institutional trader. However, if I'm going to look at some options, it came up and did a doji. If it opens positive, it's probably going to have another magnitude day like this. And what's that tell me about the 50-day moving average area? They're moving away from it. I can be buying maybe a call spread. Where is accurate buy on a positive open? If we wake up Monday morning and they're opening Johnson & Johnson positive, which would probably still be the market's opening in the right direction, you could be a buyer based upon a doji sandwich. Johnson & Johnson just doesn't trade as because it's a big institutional trader. Now, if you're an option trader, yeah, you can trade some of these. Clyde, yeah, you can trade any one of the indexes, the futures. Whoops. So we recommended IOVA on Friday if it traded positive because it would be breaking out. But it did a doji type day. Now, a doji type day could be with a little bit of a body. That's actually what we call a spinning top because it looks like a spinning top, but it still represents the same thing, indecision between the bulls and the bears. So if this opens positive on Monday, we can be buying with the expectation that the magnitude of Monday's trading would be about the same as this day right here, not only giving us a good entry for a swing trade, but even if you're a day trader and you see it open positive, you don't have to wait for confirmation. The probabilities are pretty strong it's going to move in that direction. You can use relative strength if you want to, Ken. I was the worst investor in the world before candlesticks came along. I was even a stockbroker for 8 years. I got out of the business because I realized that most brokerage firms have no more idea about what makes prices go up or down than anybody else. And then when candlesticks came along, the more I looked at it, the more I kept saying, this makes sense. And that's because of one simple criteria, that human nature works the same way time after time. Where would you put your stop? If I was buying positive trading on Monday, I wouldn't want to see it trade at all back below the open of this candle. This is also that process that if this opens positive, we expect a high probability of it moving in this direction. If it comes back down through this level, you close it out. Because that's not what it's supposed to do. That's that process of cutting your losses short, letting your profits run. Oops. Oh, you've already scrolled past me. What is your plan if price opens positive after a doji, but later in the day prices closes with a bear candle? Do you stay in the trade to see if the next day resumes the uptrend, or do you close the position? To close the position, because if this was opening positive and it was supposed to be doing this, it shouldn't be closing back down here. That tells you a completely different story. Did you study with Steve Nissan? No. After I got started, I saw Steve Nissan came out with a few books. But when I read his books, I didn't know any more about candlesticks or which ones worked after I read them. And I always tell a lot of people say, well, how are you different from Steve Nissan as far as your training or your trading? And I always, when I do sessions for Jeff, I always say that I don't like to make any opinion of another man's work unless I've walked a mile in his shoes. And the reason for that is if I say something that pisses them off, at least I have a mile head start. And secondly, I've still got his shoes. So the doji sandwich is what set up exactly. A bullish candle, an indecisive trading day, a doji. Then we're looking for a positive open after that. So Disca, you can see there's been a strong reversal off a doji hammer and then a doji on Friday, which means if it opens positive on Monday, we're looking for the same magnitude move as this right here. Whoops, let me go back. Yeah, notice how this uptrend started. There's your kind of your left-right combo. What to the width? Oh, there shouldn't be any width of the stochastics line. Open positive, you mean the open print is higher than the close of the previous session, or you wait for a candle to move and a candle close higher than a particular period? If I was watching this and it was opened and it waffled around a little bit right in here, I'm going to sit and watch it. But if it starts moving positive, I start jumping in because I can calculate what type of formation it's going to do. Do we need to bother how overall market is doing when? Yes. The first thing I do every morning before I want to see, first of all, we've kind of made an assessment of which way the market should be moving. And then we want to see that morning before the market opens, what are the pre-market futures doing? So obviously, if we're in an uptrend and we see the pre-market futures are going to open up where the Dow is going to open up down 120 points, we're not going to jump right in. We're going to wait and see what happens. On the other hand, if the market's in an uptrend and we see the pre-market futures are showing the Dow is going to open up 60 points and the NASDAQ up 20 points, and the stock that I'm looking at is opening positive, I might be buying within the first 90 seconds. So yes, the market direction each day has a very strong influence on whether you should be buying that day. Do you enter at the doji high? Yeah, just a positive open after the doji itself, not necessarily the the range of the doji. Will you take a doji sandwich in the middle of the trend? Yes, because the middle of the trend is still telling me we're heading higher. Wider lines versus narrow lines. The lines on the stochastic should always be the same. The line is just a line telling you where the stochastics are. Duration of the charts, it doesn't matter. All I want to do is see what's happening here. Whether you want to look back 2 months, 4 months, 6 months, I always make it big enough where I can see what's happening right here. Where can we see the pre-market futures in the morning? On any financial news station, Bruce, they usually have whether you're watching Fox News or CNBC financial news, they usually have the pre-market futures showing up at the bottom of the screen. Or if you're trading Thinkorswim, you can have the YMs on your watch list, and that will tell you whether they were buying or selling going into the open. No, if you're buying based upon, if you're going to keep the trade for a week or so, a swing trade, if you're buying based upon a candlestick buy signal, you get ready to sell when you see a candlestick sell signal. You can pull the trigger on a 5 or 10 minute chart. Yes, you can use a shorter time frame to tell you when things are actually moving in the right direction. Okay, so let's see, I think this is right. Oops, nah. This is what we call a flutter kicker signal, which is one of your strongest signals. Notice how this opened here and closed here. The next day they did a doji, but it opened below the open of the previous day. And what do we know about the doji? The price is usually going to move in the direction of how they open it the next day. So if they start trading this lower, you've got what we call a bearish flutter kicker. One of the strongest reversal signals in candlestick analysis is the kicker signal. If you took out this little flutter, you've basically got a kicker signal. The only difference is when you see this, sometimes when they do a kicker signal and you see it already going, you may have to run around and figure out where you're going to get the money, sell something else, and jump in. Whereas when you see a flutter kicker signal, you're already prepared the night before to say, all right, if this is starting to sell off, I'll get ready to buy this. We're not, Harpreet, we're not buying or selling the moving averages. We're buying or selling based upon what the candlestick signals are telling us. Now, here's another thing too. I use candlestick analysis as my primary consideration. If you're following somebody like Steve or Chuck Hughes or Fausto or any of those guys, follow their system. But if you overlay candlesticks on your charts, you're going to have a much more clear analysis of what they're projecting. How important is the average D line? It doesn't. Once I put the stochastics on, that's it. I don't even pay attention to them anymore. I want to know if I'm seeing a sell signal and stochastics are up here, that tells me it's time to start thinking about getting out. Would that not be an inverted hammer? No, remember, an inverted hammer occurs in the oversold. It'd be more like a shooting star. Bradley, we don't have to backtest this. The reason we're looking at all these is because over the last 400 years, the Japanese rice traders have identified these signals and patterns based upon what happens normally in human nature. So the backtesting is 400 years of not only testing it, but actual use. The Japanese rice traders that used candlestick signals did not become wealthy. They became legendarily wealthy. And they did it on the most basic of all commodities, rice. Can't get too much more boring than that. But it illustrated one simple factor, that prices do not move based upon fundamentals. Prices move based upon the perception of fundamentals. And all candlestick signals are the graphics of what is going on in human nature. So again, there's a gap down. So if you see a gap down, and let's say you weren't trading this, but you saw this gap down, what's an easy entry? If it opens lower the next day, you know you have a bearish flutter kicker in progress. The 3T line is just something that the further away you move from the T line, the more effective the 3T line becomes. Richard, I don't understand. Good memory, but short. The T line input is. I don't understand. How much do the algos affect candles? I don't know, and I don't really care. I'm trading off the candlestick signals. Everything else on the chart is just confirmation. Now notice this bullish flutter kicker. Where did it occur? Right here at a major resistance level. So just the fact that they gapped this up and did a doji, stone doji the next day told us a very simple factor. The price was going to move in the direction of how they opened after a doji, which meant if they opened it lower, they failed at the 50. If they opened it higher, they're going through the 50. You've got more upside. John, nah, I wouldn't think so. Remember, we're still using the candlestick formations to tell us what's actually happening in investor decision making. Bullish flutter kicker. Again, right here at the 50. Now, the flutter kicker is so positive or so strong, it doesn't have to be at a major resistance level. But if you can add that to your analysis, it makes it that much more better probability that that's where very strong investor sentiment is coming in. What information generates the T line? I'm glad you asked that because I forgot to mention that. How is the bearish, let me answer that. How is the bearish flutter kicker different from the best friend? The best friend is, we'll get to that, a doji followed by a gap up. A flutter kicker is bearish candle, a gap up above the previous day's open, and then we see how they open it the next day, telling us we got a bullish flutter kicker. All right, Clyde, no. The information that is generated by the T line is the fact that the 200 and the 50 work like magnets because everybody's watching to see what happens when we get to that level. So everybody's watching. Now, nobody has the T line on their charts. And if you want to put it on your charts, you'll find that it works very effectively. Which means if you take the combination of candlestick signals being the graphic depiction of what's going on in human nature, and you take the T line, which acts like a natural support and resistance level, like a Fibonacci characteristic of human nature, when you combine those two, you've got an extremely powerful combination for telling you when you're in an uptrend and how long you can stay. For some reason, these moving averages or something's happened here on the T line. Again, I threw them together real quick last night to have updated charts. I'm a gap intraday trader. Should I look at the close candle to determine if I have a gap or go retest pattern? I am a gap intraday trader. Boy, I take it you're not trading gaps intraday because very rarely will they occur because obviously the trading during the day is flowing. So if you're buying a gap up, yeah, then you flip to your 5 and 10 minute chart to see which direction everything's moving from there. The T line, Cindy, is the 8 exponential moving average. Can we reserve questions until the end of the course? 2 hours? Okay. Is the T line, how many periods? The T-line is the 8 exponential moving average. Okay, the best friend signal. The best friend is a doji followed by a gap up, especially coming out of the oversold area. The reason we call it your best friend is that not only is it going to tell you you're in an upward direction, but it's telling you you're going to be in a strong upward direction. Oops, can everybody else hear me? All right. Yeah, somebody might have to help Bill. The reason I rank this as number one is because if you have a day of indecision and they gap it up, they've told you immediately what their decision is. And not only is the decision telling you they're going in this direction, but there's probably going to be a very strong move in that direction. Same scenario on the downside. If you see a doji and they gap it down the next day, especially in the overbought area, what's that tell you? It told you this area is probably resistance. Get ready for more downside. If they do a best friend signal, this is what we call a bobble breakout. There's about 6 or 8 patterns in candlestick analysis. The J-hook is one of them, but a more defined J-hook is you have an uptrend, they fail at a resistance level. They pull back, and notice where they pulled back, right smack dab to the T-line. Then the T-line pushes everything back up toward the resistance level, and notice what happened at the resistance level. A doji gap up. What'd that tell us? If this was wave 1, this was wave 3. Just an extremely high probability that you're going to have more upside. Anytime I see this doji gap up, it's implying there's going to be more upside. Micron had a downtrending resistance level. And for some reason I couldn't, it was actually the 50-day moving average was here. But notice what happened right here. A doji gap up through the resistance level. Told us we had more upside, and with the probabilities being, they could take you all the way up to the 200-day moving average. Once again, this right here was the message that told us the pattern, which looks like a J-hook pattern. Told us if this was wave 1, wave 3 is going to be up here someplace. Same scenario. We were in Delphi right now. Doji gap up through this level tells us there's going to be more upside. Oversold is not required when you're looking at a pattern. Remember, the signals you're buying when you're in the oversold area. The pattern is usually going to be up in the overbought area when it breaks out. Marvell, we recommended this one because look where the doji gap up occurred, right off the T-line. Wave 1, wave 2, wave 3 of your J-hook pattern. So if this is wave 1, where do you think wave 3 is going to take you to? Probably up here to the 200-day moving average. Best friend gap, previous high to today's low, not close to open. Best friend gap, previous high to today's low, not close to open. Clyde, you got me confused there. Look at your fry pan bottom. CGC, one of the weed stocks. There's your little doji gap up. This is the result you expect after a fry pan bottom. FNSR, fry pan bottom, doji gap up on Thursday, closed here Friday. So here you've got everything setting up. You've got your best friend starting the uptrend of a fry pan bottom breakout. If this opens positive on Monday, what do you got going? A doji sandwich after a best friend signal and a fry pan bottom breakout. What's your upside potential? Well, if this was a kind of a wave 1, wave 2, wave 3 could be much higher. All we're doing is analyzing what investor sentiment does time after time. That's what creates these patterns and these signals. Are you changing the stochastics to 1233, or is 1233 T line. No, stochastics are down here, telling you where you are in the overbought or oversold area. The T line is this black line, the 8 EMA. On which one of your books do candlesticks would you recommend among them all? High Profit Candlestick Patterns, Robert. It's the green cover book. But Steve, sometimes patterns are subjective. Is it necessary to understand them? Yes. Yes, the whole reason that we see patterns is because human nature works the same way time after time. Do earnings affect patterns? Yes. Remember, candlestick signals are the cumulative knowledge of everybody buying and selling. That's also based upon what the earnings did. I don't use Heikin-Ashi. 20, 30 years ago, I helped write the formulas for Heikin-Ashi. But Heikin-Ashi is a kind of a vanilla blend of candlesticks. If you just use the simple concept of candlestick signals and patterns and the T-line, you're going to be way ahead. So the benefits of pattern identification is the fact that you're seeing things that work time after time, like the J-hook pattern. Notice how the J-hook pattern started back up on this one. When it pulled back, where did it pull back to? Right smack dab to the 50 and the T-line, coming out of this little rounding bottom. What does this tell us when they started buying? Wave 1, wave 2, wave 3. The McMuffin is just a combination of the patterns. A morning star signal followed by a Doji sandwich, or the morning sandwich, is the McMuffin. So if you see a morning star signal followed by a Doji sandwich, remember, a morning star signal is one of the 12 major signals that gives you a high probability a reversal has occurred. A Doji sandwich is a high probability pattern telling you the bulls have taken control. You add those two together as a McMuffin, your probabilities are increased that much more. In stochastics is over 80 overbought or oversold. Stochastics up here tell you you're overbought. Now that doesn't necessarily mean you get ready to sell. When do you sell? You sell when you see a candlestick sell signal and a close below the T-line. That will take a lot of indecisiveness out of your trading. A morning star signal could be a down day and 2 indecisive days. And the third day, look what the third day or the fourth day did. Not only closed more than halfway up this candle, but way above the halfway point and above the T-line, and then followed by your Doji sandwich. Your McMuffin told you had a high probability you're going to be in an uptrend. Morning star signal, Doji sandwich starts the uptrend. Again, this is not rocket science. This is just merely identifying what the candlestick rice traders have illustrated to us for hundreds of years. So let's see, did I get done in time? I guess I did. Jeff, do you have the our promo or our
All right, Steve. Sorry about that.
okay. Yeah, if you have our link, our link, and I guess along with the special, we're providing 30 days free trial to our website. Our website is we've got a chat room that's open every single day. There's usually about 150 people in the chat room, but you've got everybody there that has different levels of candlestick analysis talents. So it's a good place that if you're learning candlesticks, that you can get explanations of what signals work, number one, and number two, you've got a constant supply of good trades because somebody analyzing the chart patterns. And I usually put out 2 or 3 stock picks every day in a video format so that you get an analysis of what the market is doing. So if we think the market's heading up, you're probably going to get 3 recommendations of bullish charts. If the market's going down, bearish charts. If the market is going sideways, you might get 2 longs and 2 shorts based upon how they open it the next day. I think I've already gone past that, Harry, but real quickly, a McMuffin is a morning star signal followed by a Doji sandwich, or a morning sandwich, which is your McMuffin.
Okay, good job, Steve. Thank you. To answer Harpreet's question real quick, if you, yeah, we do cover Toronto Stock Exchange. We get our data from Refinitiv, which was formerly known as Thomson Reuters. So it's a huge organization. We cover everything in Canada, as well as about 200 global markets, as well as currencies, as well as Forex, as well as just about anything that you want. So in that case, I do want to talk a little bit about in the 4 minutes that we've got before the next speaker, the candle profit systems number 2. We actually kind of worked on that. We did a new version of that last year. And what we did with it is actually pretty cool. Like I said, it's been rated one of the best, it's our best selling add-on modern add-on that we charge a one-time cost for. And what we did with it is Steve and my programmers worked for months and months and months, almost a year, to get like all of his fry pans, all of his patterns actually showing up on a chart and scannable in the software. So there's a list of all the patterns, and we don't have a lot of time, but I kind of want to show you what that actually looks like on a chart. So this is a chart of Apple. When you apply Steve's templates, what's going to happen is you're going to get all of the signals generated automatically. I'm going into the audio to just meet Steve. He's coming through a little bit. I think he's eating an apple. Okay, there we go. And so automatically, these patterns are actually going to be labeled for you. All you have to do is apply the templates. They're going to show them off for you. And I'm a big fan of certain patterns. One of the things I like about the actual software is it labels them for you. If you have questions about the individual patterns, we don't have a lot of time, but we can kind of cover this a little bit later too. You can come in here, and there's actually an expert commentary that'll tell you exactly what the bullish kicker is, what you should be looking to find on that bullish kicker, and if there's a fry pan bottom as well. Okay. The other thing I really like about it is the scanning that we've got in Metastock and the scanning for his patterns. So all of those patterns that were in that spreadsheet I showed you are available as different scans that you can run. So one of my favorite patterns is the pattern called the Doji Best Friend, which is in this Doji Dynamite scan. And if I want to just run a real quick scan against the S&P 500 because I only have less than 2 minutes, I can just go ahead and hit the scan button. It's going to go through those 500 securities for me that quickly. And what I'm going to have is, instead of the 500 stocks that are out there, I've rejected almost all of them. I can just look at the ones that have an opportunity, in this case for Monday morning. So in this particular scan, we're looking for a Doji at the top, a Doji Best Friend, a left-right bullish, a left-right bearish, a series of bearish, a series of bullish. These are all actually Doji sandwiches. So I can go in and open them up, take a look at the stocks, get the advice, make a decision on exactly what I want to do. And instead of looking at 500 stocks in this case, I just am going to look at the actual ones that have opportunities. Scanning is one of my favorite functionalities in Metastock. I know there's a lot of questions coming in. I'm going to go back through and actually type them up. I want to respect everybody's time and our next speaker's time as well. So let's go ahead and go back to the PowerPoint. And like I said, any of the questions that you've got, you can actually email me if you want. You can talk to any of our sales guys that can kind of explain this thing to you. I will say just a couple more things again about this. So we've had this particular add-on reviewed in Stocks and Commodities magazine twice. And Barbara Starr reviewed it, as well as Dennis Peterson several years ago. And both of them were very, very glowing reviews. This is the most popular product that we've that we sell right now. And it's one that I use on a very, very almost daily basis to find and identify trades. So all in all, this Candle Profit Systems is an add-on for Metastock. It's got 6 explorations. It's got the expert advisor. It's got 36 different patterns. And as soon as you order it, basically it's going to come with a 40-minute training session. That training session is actually broken up into 2 parts. One part is actually Steve kind of talking about the patterns and how to trade them and that kind of stuff. The second part is actually me just doing a little mini boot camp. Here's how you set up your scans, et cetera, et cetera, et cetera. I would recommend you try this product. I'm extremely proud of it. We offer it with our normal 30-day money-back guarantee. It's a one-time cost of $4.99. Here at the summit today, we're going to do it for $3.99. And to order it or to ask any questions that you need to, 800-882-3040. You can chat online with us at metastock.com/saleschat. Okay, and we are going to have some of my favorite presenters today. We have a really, really good collection of speakers. So all in all, the first 4 speakers